Is our spotlight speaker presentation, as I said earlier, the new COVID-19 legislation and how it can help you, presented by West Orange Chamber member Adam Markowitz, who's the partner of Howard Markowitz, PA. My name is Krista Carter. I'm the Vice President of the West Orange Chamber, and I'm so happy to have you guys all with us today. Hello and Happy New Year. Before we get the program started, I just want to go over a few things that we have. First, I would like to say thank you to our 2021 Board of Directors, including our Chairwoman, Camille Evans of Virtus Law. And we thank our Board of Directors for their guidance and their leadership and support. And if you would like to see our Chamber board members, you can go to wochamber.com and you can see them all listed there. And while you're at wochamber.com, I would love for you to visit our community and supporting trustees. Our community and supporting trustee members, they invest in the chamber at the highest level of membership. And those dollars then help us put together programming that benefits all of our chamber members, and which in turn then benefits our West Orange business community. So I want to say thank you and to our community and supporting trustees, and please check them out on wochamber.com as well. One thing I was supposed to say at the very beginning, this event is being recorded. So you'll be here forever because we will show this on wochamber.com as well. I'm going to say wochamber.com a lot today, so get ready for that. So as we start the new year and roll out with the new vaccine, the Chamber will continue to be here for the West Orange business community. The Chamber leadership and the Chamber team continue to focus on how we can help our business community flourish and rebuild at this time. So be sure to keep an eye open for the emails that tell you about future programming and events. And as I said earlier, visit wochamber.com, and that way you can see everything that's happening here at the Chamber. And if there's not something there that you see or you need additional help, just call us. We're here at the Chamber, or email us. We're always here to help you. So today we have our sponsor of Computer Business Consultants. They're our event sponsor today, and it is my pleasure to introduce them. Now, Computer Business Consultants has been a community trustee for many years, and they are also the Chamber's IT provider. And if you're not aware, in my role at the Chamber, the IT is my department. Department of one. But I can tell you as firsthand testimonial that Computer Business Consultants is the best IT provider there is in town. I never worry about anything. I sleep well at night. I wake up well in the morning because I know my IT is going to be taken care of. So please help me welcome Clinton Pownell, the CEO of Computer Business Consultants, to deliver his sponsor message. Thank you, Clinton.
Well, thank you, Krista. It was a very appreciative introduction. Good morning to everyone and Happy New Year. Computer Business Consultants has been a trustee of the West Orange Chamber for many years, as Krista has said. We are excited to kick off the new year with this virtual event discussing the new COVID-19 legislation. We are encouraged by the introduction of the COVID-19 vaccine and hope 2021 brings us opportunities to have face-to-face events and activities once again. I'm looking forward to getting out, meeting with everyone here, and visiting clients and friends. I would like to give you a quick overview, 1-minute overview of what Computer Business does. Computer Business Consultants is a full-service IT company offering a comprehensive suite of IT services ranging from complete IT managed services and security to innovative custom design solutions. So what can we do for your business? Well, we provide IT consulting and technology services that can either work alongside an existing IT department, or if you're a small business, we can be your IT department. We see our role as your IT business partner, no matter the size of your business. In this world of cyber hacking, data breaches, video conferencing, and remote workplace, we provide you with the technology that will protect your data, your network, and your staff so you can focus on running your business. We offer a no-charge technology assessment. We can review your IT security, mobile management, data backup systems, and more. Our team can be 100% remote, or we can provide on-site IT consulting. Call us to schedule a meeting, and we can provide you with the options for cloud-based storage solutions, data backup and recovery, and overall IT consulting. Once again, we are honored to be the Spotlight Speaker virtual event sponsor, and we at Computer Business look forward to working with you in 2021. Thank you.
Thank you very much, Clinton. And yes, they can help the smallest companies to the largest companies. And when you call and go, oh my God, what did I do? They're right there to help you, and they're very nice about it too. So thank you very much, Clinton. All right, so we're going to get on to the program now. But before we get started, I want to tell you that if you have questions today, I want you to put them in the chat box. And you'll see that the chat box, if you don't know where the chat box is, at the bottom of your screen, there's a little button that says chat. And when you hit that, the box pops open. So type in your questions there. You'll see that it is a very small box. So we are going to try our hardest to read all of those questions to Adam at the end of the presentation. But Adam has promised that if we don't get to all the questions, he's going to try to answer them by the end of today. So please put them in there. Please be patient with us and know that Carrie and I have to put on our glasses to see the little writing. So be kind to us. Okay, so our speaker today is a featured guest speaker today is West Orange Chamber member Adam Markowitz, and he is a partner of Howard L. Markowitz, PA. Adam is no stranger to the West Orange Chamber members. He currently leads the Tuesday networking group, and last year, when PPP was first rolled out, Adam did another presentation just like this, and it was very beneficial to so many members, and he answered all the questions. So we were very thankful for him to come back today and help us with round 2. And just in December, Adam was awarded by the Chamber with the Leader Out of Necessity Award for all of the hard work that he did in 2020 and what he plans to do in 2021. So without further ado, please help me give a virtual warm welcome to Adam Markowitz.
Thank you so much, Krista, for that. Let's share my screen here. And okay, so who would have thought that after we went through this all these months ago when we had the first round of PPP that we'd be doing this again in January? And who would have thought that when we did this in March that it would be nothing compared to what we are about to look at today? This bill that just became law on December 27th is enormous. And I have kind of tongue-in-cheek, but not really tongue-in-cheek, entitled this All You Need to Know About 5,593 Pages of Legislation in Approximately 55 Minutes. To give you kind of an idea of the depth of this bill, I have a 60-pound dog. This is my 60-pound dog standing next to 5,593 pieces of paper that we will have to analyze here. And we're not going to cover all of this by any stretch of the imagination. We're going to hit the highlights. This is going to be very wordy. This is going to be very tax-y per se. And I don't expect that everybody's going to get everything with this because there's a lot here. This is a 70-slide presentation. We're going to skip over a lot of it that's here for reference. This will be available on the Chamber website either later today or some point later this week, and I will be updating this as we need to do so. I also put the picture of my dog here because my dog is sitting a couple feet away from me in case he decides to interject in the conversation. Again, I am Adam Markowitz. I am an enrolled agent. I'm the vice president and partner of Howard L. Markowitz, PA, CPA, but you don't really care about me. You care about all of what I have to say today, so we shall go on. A general disclaimer. This is kind of to cover my own license and cover my backside here. You're gonna need help on an individual basis. And I know this because what applies to one person in here may not apply to someone else. And I'm going to cover this as broadly as possible. As promised, questions today, I am hoping to get to about 5 or 10 minutes of them, but I understand that most of the questions are going to be, how does this help me specifically? So for those questions, please feel free, put them in the chat box, but please leave me your email address as well. Do not private message it to me because I don't know whether I will ultimately see it because I'm not seeing the chat box because I'm sharing my screen, but please feel free to give that information to me. I will get back to you today. The last slide is also going to be my contact information again. Feel free to call me. Okay, it is my job, as I see it, to provide anything COVID relief related to as many people as I can. And for as long as I am on this side of the ground, I am doing it on a complimentary basis. So whether you are a client of mine, a West Orange Chamber member, or a total stranger who has happened to stumble upon the Zoom call today, I am here to help you for as long as I am humanly able to do it. All right. This monstrosity that we have in front of us is called the Continuing Appropriations Act of 2021. The first 6 or so slides gives the history of this bill. I am not going to go over it for the sake of time, but it is here for you to go back and read at your leisure. I do want to point out here just how big this bill really is. I have picked out 5 of the most consequential pieces of legislation that we have had over the course of our history, specifically in the last 100 years or so. And the biggest bill in America's history in terms of legislative text was the Affordable Care Act, which was the big health insurance sweeping reform from the beginning of the Obama administration. That was the first bill in American history that topped 1,000 pages of legislative text. This is over 5 times the size of that bill, and it is enormous. Okay, something else I neglected to point out at the beginning. There's a lot of words on these slides. If you see something in green, like you see here, this is something that I am going to stop and highlight and I think is very important. It could be a dollar amount, it could be a date, it could be a concept, but if you see it in green, that's where your eyes need to be drawn to. Obviously, bad example here because this is just kind of a very general overview of some of the personal relief measures of the CAA. But as you will see going forward, there will be some important things highlighted. So here's just kind of a general recap of some of the things that you will see that will personally help you with the CAA. And we will start with stimulus checks. The IRS has been really, really good about these this time around. If you are eligible for a stimulus payment, there's a good chance you either already have gotten it or will be getting it in the next few days. Remember that this bill only became law on December 27th, and today we sit on January 6th, and the IRS estimates that as of the end of the day yesterday, they had gotten out approximately 80% of all of the economic impact payments for this. How much will you get? $600 per qualifying adult on the tax return and $600 per child who is under the age of 17 at 12/31/2020. There are income thresholds, and basically if you got stimulus the first time, you can expect stimulus the second time. But there's a caveat on here that if you make less money in 2019 than you did, less money in 2020 than you did in 2019, you will be able to get a tax credit equivalent to your stimulus on your 2020 income tax return that will be starting to file here shortly. When will I get my check? You probably have it already. But if you don't have it, the CAA only gave the IRS until January 15th. To get out all of these payments. So if you don't have it by now, you will get it by January 15th. If by chance you do not get it by January 15th, you will be stuck claiming this as a tax credit on your 2020 income tax return. All right, lots of questions inevitably about what about this $2,000 that I keep hearing about. President Trump, after this bill passed through Congress, decided to interject and say, no, I want stimulus payments to be $2,000 per adult and $2,000 per child. Very strange coming out of the mouth of a Republican president. And the Democrats went, great, let's go ahead and do this. And they passed a bill through the House of Representatives called the Cash Act that would do exactly what Donald Trump wanted to do. Mitch McConnell, though, is not in favor of this. And since he controls what comes to the Senate and doesn't come to the Senate, he pocketed it, and it never saw the light of day. Which is why yesterday became very important in America's history, because there were 2 Senate seats that were up for grabs in the state of Georgia that were currently held by Republicans that are now going to be held by Democrats. Once the election has been certified, it is expected that Jon Ossoff and Raphael Warnock will be the 2 new representatives of the state of Georgia, which will bring the balance of the Senate to an even 50-50 and will make the majority leader of the Senate Chuck Schumer instead of Mitch McConnell. What does that mean? The idea of a $2,000 stimulus payment is probably going to happen at some point down the line after Joe Biden enters office on January 20th, but we don't know when that will be, and it is currently not law. The CAA extended unemployment benefits, so if you are on unemployment or know someone on unemployment, their benefits are now extended through March 14th. Back in the spring, the Congress with the CARES Act presented pandemic unemployment assistance, which was equivalent to $600 per week. Then Congress with the CAA has decided to change that to $300 per week now. So unemployment benefits in the state of Florida here are capped at $575 per week through March 14th when this program expires. Eviction diversion, basically nobody can throw you out of your business or your house now until at least January 31st. There's a good chance that either Congress or President-elect Biden will change that when he comes into office to extend it. One thing that did not make this bill, if you can imagine that there's anything not in 5,600 pages of legislation, is the extension of deferment of federal student loans. The CARES Act originally deferred all federal student loan payments, interest-free rather, through December 31st. That was expected to be in this bill, but it didn't make it. So if you have federal student loans in January, you must pay them. But there is a caveat to that the Department of Education and Department of Justice, if your loans are specifically held by them, that they have extended student loan deferrals through January 31st. Good chance this gets extended, but nothing can happen until Biden takes office here in a couple weeks. Charitable contributions, basically, if you donate up to $300 per year, you will be able to get an immediate tax write-off for it. There's stuff in here about retirement accounts and FSAs. Talk to your financial advisor about that. Okay, we're not here really to talk mostly about that. We want to know about all the business measures because this is where the big fat money is going to come into play for small businesses. And we're going to talk a lot about the PPP program, but there's a lot more here as well in addition to that. PPP deductibility is the problem you didn't even know that you had. And you thankfully will never know about it now. So when the CARES Act came out, its flagship program was the PPP, and I imagine that most, if not all of the people on this call got a PPP loan. What that loan was it gave you a loan equivalent to 2.5 months of your annual payroll from tax year 2019. The caveat to this, though, and the kicker why everyone did it, was if you use the loan proceeds the way Congress wanted you to, meaning you use it for payroll, rent, utilities, or a few other things, that the loan would be completely forgiven to you. Now, normally when a loan is forgiven, the IRS treats it as taxable income, but the CARES Act specifically said, no IRS, you can't do that. So the IRS, of course, turned around in very IRS fashion and said, well, then fine. If it's not going to be something that is a loan that we can tax, we're going to call it a grant because effectively that's what it is. So if it's a grant, that's great. It's non-deductible to you, but then you can't deduct the expenses that you use the grant money for. Well, Congress lost its mind about this, but it couldn't do anything about it without passing another bill. And finally, on December 27th, we got what we needed. So the PPP is now a fully deductible item. So no matter what you used your PPP for, it is now deductible, and the IRS cannot make any negative determination against you because you took a PPP. Let's say you got $100,000 of PPP, which was a very common sort of loan amount. What you didn't know, that what you will now never know, is if this bill didn't happen, you would have owed between $20,000 and $25,000 in income tax this year just because you got a PPP. Thankfully, that is no longer the law. The CAA has overruled that, and we can now move forward without having to worry about the big income tax bill. All right, PPP Round 2, which is why I imagine the mass majority of you are actually in this room today. General disclaimer. We do not know all of the rules that SBA is going to use for this yet. Congress gave the SBA until today to come up with guidance for how PPP Round 2 is formally going to work. You may note that's today. They have promised that we are going to get this at some point by tonight, whatever that means. Who knows what time zone that they're in at this point either. What that guidance is going to look like, we expect it's going to be pretty darn bad in the grand scheme of things because the SBA was just not given enough time to dot all the I's and cross all the T's for this. So even though we're going to get guidance today, it may not be comprehensive guidance, but we do know what the actual text of the CAA says. And for now, we're going to take it literally. So everything you hear from now through the end of this presentation in another half hour or so is subject to guidance from the SBA and in some cases the IRS. When Congress passed the CARES Act, the only qualification to get a PPP was that you must have what's called economic uncertainty. It's a term that they did not define and probably will never ultimately define. But it opened the door up to anyone and everyone who thought they may be impacted by coronavirus to take out one of these loans. And what the unintended consequence of that was is that tens of billions, if not hundreds of billions of dollars, were handed out to companies that didn't truly need them. You may have heard of some people and organizations such as the Los Angeles Lakers, Tom Brady, 50 Cent, Kanye West, Shake Shack, all of these big companies and big people who have way more money than everyone on this call combined will ever have, were able to fight for the same pot of PPP money that we were. And Congress realizes that that's a problem, and if they were going to reopen the PPP program, that they needed to put a qualifier. So now, instead of having economic uncertainty to qualify for a PPP, you must have had economic harm. The way that Congress has defined economic harm is that you must have a 25% reduction in revenue in any quarter of last year as compared to the same quarter the previous year. Now, again, this is one of the things we're going to need some guidance on from SBA, because what does 25% reduction in revenue mean? Does it mean what you have physically collected? Does it mean what you've billed? Does it mean gross receipts? We're not sure. We think it's going to mean gross receipts, which means what did you actually get in your bank from the start of the quarter to the end of the quarter? But again, we don't know that yet. So this presents itself with a problem, and this slide will show you what that problem is. The company, the mythical company that I have created here on the far left is a good representation of a standard company here in the state of Florida that had a very big drop in revenue in the second quarter when Governor DeSantis shut us down, and recovered a little bit in the third quarter and the fourth quarter. So you could see this company highlighted in green had a 60% reduction in revenue from the second quarter of 2020 to the second quarter of 2019, thus will qualify for another round of PPP. What I don't like about this is the company in the middle, which made more money last year than it did in 2019, made more money in the fourth quarter of 2020 than they did in 2019, but will still qualify for PPP based on the rules we have now, because their third quarter, they had a 40% reduction in revenue. Now you can see where this is going with the big problem we have for the poor company on the far right, which had a 24.999% reduction in revenue in all 4 quarters last year. That company is out of luck because they did not have a 25% reduction in revenue. So even though company 3 made less money last year than company 1 or company 2, they will not qualify while the other 2 companies would. All right, you qualify. Now what? How much money are you going to get? Basically, whatever you got in round 1 of PPP is probably what you're going to get in round 2. There is a clause in the CAA that says you can take your payroll costs from the last 12 months and use that as your base for PPP. But I will note that these are the exact same rules that the CARES Act laid out, and there was not a financial institution on the face of this planet that allowed anyone to use that standard because it was just easier for them to use 2019. We'll see. We don't know what's going to happen yet. We will hopefully get some good clues on that today. But baseline, whatever you got in PPP, you will get it again. Exception to that, if you are a bar, a restaurant, a hotel, or anyone else in the food and beverage or hospitality industry, Congress realizes that y'all were hit really, really hard and significantly harder than the average American business was. So instead of being entitled to take 2.5 months of payroll costs, you will be entitled to take 3.5 months of payroll costs as your PPP. This is just a definition of what payroll costs are. These are rules from the original CARES Act. We will just go flipping past that. All right, you qualify, you know how much you're going to get. When am I going to get my money? And the answer is we don't know yet, but it's soon. And the analogy that I have used here is that the PPP program is like a woman who is 9 months pregnant. That baby is coming. That baby is coming soon. And when it comes, your life is going to stop for a little while. But we don't know whether that's going to be tonight, tomorrow morning, first thing Monday. We have no clue yet, but we know it's coming soon. I will tell you that the likelihood that anything happens before Monday is very, very slim because after we get this guidance from SBA, the banks are going to have to implement it. That will take a little bit of time. But when the day comes that the banks all say, all right, have at it, it will be open season just like it was in round 1. $525 billion of PPP was cut into the first round of this going through August. Now there is going to be $284 billion in this program. And you may say, well, Adam, that sure doesn't sound like enough money to cover everybody. But remember that there are a lot of safeguards that are in place now, including some big ones that I have not listed here because they do not pertain to probably anybody and certainly not most of the people on this call, such as if you already received $10 million of PPP, you're out of luck. If you have more than 300 employees, you're out of luck. And of course, you have to meet that gross receipts test. I suspect, and several other industry experts who are way, way smarter than me, think that this $284 billion is going to be enough or pretty close to it to satisfy everyone who wants a PPP that would qualify if the safeguards are put in place. SBA is expected to threaten severe action against anyone who tries to get a PPP that does not qualify. I cannot emphasize this enough. Do not just listen to your random banker who says, oh, go get a second round of PPP. You have to qualify. We don't know if there will be so much as criminal charges that could be brought if you do not qualify and get a PPP. Do not chance this. Make sure you qualify before you actually go and get this. All right, it's not to scare, well, it is to scare you, but it's not to discourage you from going and getting it if you do qualify. It's discouraging you from just listening to somebody who doesn't know what they're doing, who says, oh yeah, go get this money, because that would then cause a real panic to this program. The bottom line is this is going to be very messy. There's just no two ways around it. If you did not get a PPP in round one, good news, you are eligible to get a round one PPP, and you only, for now, have to meet the baseline of economic uncertainty to apply for a PPP round one loan. But there's something very interesting in the CAA that says you cannot apply for a round two loan until you have used all of your funds from round one. Now, that could put a business in potential trouble who took a PPP in round one and has not spent it all yet, or didn't qualify for full forgiveness. Are you going to be able to get a second PPP? I suspect the answer will be yes, but if you read the CAA literally, the answer to that may ultimately be no. But on the flip side of this, if you did not get a PPP in round one, there is a chance you could get two of them. Because if we get your PPP fast enough and you go ahead and spend it, if the program is still open and still has money, you are allowed to go get a second PPP loan. However, keep in mind this program expires on either the earlier of when $284 billion is depleted or March 31st, assuming that Congress does not extend or replenish funds. Anybody who has looked at a PPP forgiveness application will know that this was not easy. And I have recommended to all of my clients who took PPP, do not even think about this yet until we get what we got from the CAA. The new requirement for PPP borrowers who have loans under $150,000 is that they will have a one-page application that will come out from SBA no later than January 20th that will not require any documentation. You will just have to certify that you met the rules of PPP to get full forgiveness. Do keep in mind, though, that these are still subject to audit for a period of 4 years, and SBA can come in, even with your tiny little $10,000 PPP loan, and say you didn't follow the rules, and if you didn't, you will have to pay the money back, and you could be subjected to fines and other penalties. So do not think just because we have this application that will provide a rubber stamp that you are automatically eligible for it. Make sure you would otherwise qualify for full forgiveness. Some more rules about what that means. We had gone over this previously, and you can read through this. One change that the CAA did make that I want to point out. The CARES Act says that you could, excuse me, the PPP Flexibility Act of May or June, I forget, said that you can use 40% of your PPP for non-payroll costs, which used to mean rent and utilities and some interest payments and a few other things. The CAA expanded to that to say that you can now include things like personal protective equipment, software if you've got like a Zoom subscription or something like that, or any general safety improvements that you have added to your workplace to make it safer to combat the coronavirus. So what do you do now with PPP? The basics of this slide is just we're waiting and seeing, right? See if you had that 25% reduction in revenue in any quarter from 2020 compared to 2019, and then we're just waiting at this point. We'll see what the guidance says, we'll see what the banks have to say, and then we will go forward. All right, the EIDL program was a very, very big program, and for as much of a disaster as the PPP was in round one, that paled in comparison to the disaster that was how the EIDL program was handled. There were a lot of unilaterally decided changes that SBA made to this program that were arguably illegal for them to do because they did not have jurisdiction to do it. But what the EIDL program said was you will be able to get a loan of up to $150,000 to cover payroll costs and whatever general expenses you have. The loans were very favorable. It's a 30-year payback period at an interest rate of 3.75%, but that's generally not why a lot of people got these things. A lot of people got them because of the grant that was attached to them. The CARES Act specifically stated that if you applied for an item, whether you took it or not, or whether you qualified or not, you would be eligible for a $10,000 grant. And that sounded all fine and good until the SBA unilaterally said, yeah, that $10,000 grant, yeah, we're just going to give you $1,000 per employee that you have. So if you have 3 employees, you probably got $3,000. If you had 50 employees, you qualified for the full $10,000. Now, the other thing here on the bottom of this slide is that the SBA was also following the rules of the CARES Act that said if you received an EIDL grant, that it would reduce your PPP forgiveness. So effectively, you could not effectively take an EIDL grant and a PPP. Now, the EIDL program has now had $20 billion replenished into it to add to the $20 billion that it had from back earlier this year that expired in August. But even though it says it's going to accomplish 3 things, I will give you the spoiler, it is not going to accomplish all of this. The first thing is that anyone who took a PPP and also took an EIDL grant is now going to get to keep their EIDL grant. I don't like this because, frankly, this promotes bad behavior. If you skirted the rules the first time, you're going to get away with it now. But you know what? More power to you if you got an EIDL grant and a PPP, you will get to keep that money. If you have already applied for forgiveness and your bank has not forgiven you of this amount, there is going to be something put in place to get it forgiven or to get the money back from the bank if you have paid it back to them. Here's the second reason why I don't like the first one, and I do like this. There are new EIDL applicants that will be able to join this program. So what does that mean? If you were one of my clients who I told, do not go get one of these EIDL grants because you're just going to have to give the money back anyway, you theoretically can go get an EIDL grant now when they open this program back up again. But here's the other thing we're fighting against. Good news, if you received less than $10,000 with your EIDL grant, you are now eligible to get the difference to get that full $10,000. So if you only got $3,000 in the first place because you had 3 employees, you are now entitled to get the other $7,000. But again, your second spoiler alert, do not count on all of that. And here is why. I ain't the sharpest tool in the shed, but I can do basic math. The SBA in round 1 issued 5.8 million of these EIDL grants, and they totaled $20 billion. It's an average of $3,400 a grant. If the SBA did not write one single new EIDL grant in 2021, they would need $38 billion to get $10,000 to everyone who took an EIDL grant in the first place. It ain't gonna happen. I don't know how Congress did not figure this out or catch this, that this $20 billion was not going to be enough. So what's going to happen? This could be a scramble like PPP. You may have to apply for it. The banks may, or the SBA rather, may unilaterally decide who does and doesn't get. They may prorate it. We have no idea, but we know that there is no way that everyone is going to get the full $10,000. All right, I'm 25 minutes in, which gives me another 15 or 20 minutes or so to talk about the employee retention credit. And this is the part of this presentation you did not know that you needed to see. For as wordy as the PPP stuff was, for as wordy as the EIDL stuff was, I apologize in advance. This is very technical. This is very, very confusing, and there is a lot to cover here. But the employee retention credit may change your business single-handedly, and I'm going to show you how. I promise I'm going to bring this all together for you in about 20 slides or so. In order to qualify for an employee retention credit, let me back up a step before we qualify for it. You are either entitled, per the CARES Act, to take either an employee retention credit or the PPP, not both. But in order to qualify for a retention credit, which was always a very good program in its own right, you had to meet one of 2 qualification tests. The first one, your business was shut down or partially shut down by government mandate. Now, I want to stop and just talk about that for 1 second because the IRS has made some statements about this as to what raises to the standard of a government shutdown. Say you are a restaurant. On August 23rd, Governor DeSantis lifted all of the restrictions on restaurants and basically everybody. We are a free and open state at this point, unless you have a governor, or excuse me, a mayor or some other local official who has put a shutdown on you. Now, you may say, well, Adam, I still have to do social distancing and we still have to do masks and that still harms my business. Do I qualify? No, you do not. Following CDC guideline is not raised to the standard of a government shutdown. So this will only apply to people here in the state of Florida from March 20th, when our shutdown went into play, until whenever Governor DeSantis lifted the restriction on your business. And in general, if your business was considered non-essential, you will not qualify for this test. Okay. Now, the second way you can qualify would be if your business experienced a 50% reduction in revenue from one quarter compared to the same quarter the previous year. This is just like the PPP. So for the PPP, you need to have a 25% reduction in revenue. For the employee retention credit, you needed to have a 50% reduction in revenue. How long your retention credit lasts, it will either go from the day the government shut you down to the day the government opened again, or if you qualify through the what's called the gross receipts test, you will qualify from day one of the quarter where you met the requirements for the gross receipts test until the last day of the quarter where receipts are returned to at least 80% of what they were in the same quarter in 2019. I get it. That's a lot. That's a whole mouthful. Let me do the testing for this for you, okay? But this is just kind of the general yet very specific overview of what goes into the employee retention credit. How much retention credit will you get? This is where we start getting to the good stuff here. The retention credit for 2020 is equivalent to 50% of all wages that you paid to each employee up to $10,000 per employee. So a max credit of $5,000 per employee. Say you have 100 employees on your payroll. Well, that's a big fat credit we could be talking about here. And this credit is applied to your payroll tax forms. Now, why is that important? The only reason I put that on there, even though it's very technical, is because there is a difference between a PPP loan, an EIDL grant, and a tax credit. A tax credit cannot be turned off because of a demand. This is law, and the IRS will pay out as much of these credits as they have to pay out. Congress has made an enormous mistake here, in my estimation. They estimate that there are going to be approximately $20 billion, $20 to $25 billion of money that gets poured into the employee retention credit. I think that number is going to be over 10 times that when push comes to shove. And Congress has nothing that it can do to fix this. If you are eligible, the money is yours and you will get paid out unless, they have to write an entirely new bill that would get rid of this bill. And I don't want to say impossible, nothing's impossible, but it's virtually impossible for them to turn off the faucet once this gets started. Now, very few businesses took advantage of the employee retention credit early on because they took a PPP, but the CAA changes all of that because now you are allowed to use both the employee retention credit and a PPP retroactively to March 12th of 2020. There could be a whole lot of money here in this. The only caveat is you cannot use the same payroll costs for the employee retention credit and the PPP. And again, I will throw something in here that we need guidance about. You may notice that I was talking about the SBA earlier as it pertains to PPP, and all of a sudden I started talking about the IRS. The PPP program is administered by the SBA. How is the IRS going to figure out what wages you applied to your SBA loan to make it so they don't qualify for an IRS credit? We have no earthly idea yet. My gut is it is going to be the wild, wild west about this. Okay, but what I don't want you to do, if you do your own payroll, you may see something pop up through ADP or whatever company you use to do your payroll that offers you the employee retention credit. Do not just check that button and start collecting this credit until you consult with me or somebody who knows what they're doing with this, because the penalties for getting this wrong could be severe and in a really bad situation could be criminal. Okay, so make sure you qualify before you take it. But again, this is a big fat credit. All right, a quasi real life, quasi made up example here of a business that could qualify for all of these things as we put the puzzle together. Let's say we have a dental office that was shut down by government order on March 20th, which it was from Governor DeSantis. So they were unable to perform anything but emergency procedures. So they would meet the standard of government shutdown from March 20th until that government order was lifted on May 5th. In the meantime, ABC Dental would have gotten a PPP loan, let's just say 80,000 bucks on April 15th. Now, what we know is that ABC Dental will now be able to receive an employee retention credit for all wages that it paid to its staff from the day it was shut down. I'm sorry, that second date should say March 23rd. I will fix that on the final slides. Excuse me, March 20th, it should say on that slide. Through whenever the government shutdown order was lifted, or when they got their PPP. Because remember, we cannot use the same wages for both PPP and the employee retention credit. But just based on this alone, if ABC continued to pay its employees, and we'll say they all make $1,000 per week and there are 10 of them, just for easy math's sake, they would receive a retention credit of 15,000 bucks straight cash in their pockets through payroll tax credits. Now let's keep going down the line here with this company to see where we can add more to this. ABC Dental had a miserable second quarter. And the reason they would have had a miserable second quarter is they were shut down for part of it. So say they meet the gross receipts test to qualify for the retention credit for the second quarter. Fantastic. They now qualify for the retention credit both in the second quarter and the third quarter because the credit expires at the end of the quarter where they return to at least 80% of what they made the same quarter the previous year. Now again, hate to beat the same bush here, but you can't use PPP and the employee retention credit for the same wages. But if ABC got its PPP on April 15th, it should have been done using its PPP by approximately July 1st. If that's the case, it has the whole third quarter to finish utilizing the rest of the employee retention credit, which again, assuming they keep paying all their employees, will give this company an additional $35,000 in employee retention credit for the third quarter. That all sounds really great. They're going to get another PPP because they qualify. They're going to get a $50,000 employee retention credit. We haven't even gotten to the really good stuff yet. And this is going to be the business-changing, life-changing type of money that we go over here for the next few minutes. The rules for the employee retention credit changed over, I guess is the best way of putting it, starting on January the 1st. The program was supposed to expire on December 31st, but has now been extended to the end of the second quarter, and there are some big fat changes to it effective 1/1. Instead of needing a 50% reduction in revenue to qualify for the retention credit, you only need a 20% reduction in revenue to qualify for the retention credit. And this bill provided a look-back provision, which says if you had a 20% reduction in revenue in the fourth quarter of 2020, as compared to the fourth quarter of 2019, you qualify for the employee retention credit. So even though you've probably already paid out wages, by the way, this also includes payroll paid to yourself. Now, not your family members, but it does to yourself, which is a very big deal. So you may qualify for this credit, and you may have money that you're already sitting on that you don't even know about. Now, that's not it. Two other really big changes. Instead of getting a credit for 50% of all wages paid, the retention credit for 2021 is a credit of 70% of all wages paid. So the government will give you a credit for 70 cents on the dollar of everything you pay to your employees. And instead of hard capping this at $10,000 per employee for the year, it is now capped at $10,000 per employee per quarter. So you could qualify for this for the first quarter of 2021 and the second quarter of 2021. So let's say our imaginary dental office had a reduction of revenue in either the fourth quarter or the first quarter that would qualify them for the employee retention credit. We believe that once you qualify, whether you qualify for the fourth quarter or the first quarter, that you will automatically qualify for the second quarter. Don't know that yet, but that's what we believe. We know if you meet the gross receipts test in the first quarter, you will qualify in the second quarter. So our mythical dental office here that has 10 employees that are all making 52,000 bucks a year, this company will qualify for a $70,000 retention credit in the first quarter and a $70,000 retention credit in the second quarter. So take all the rest of that stuff that we talked about, that's all good. This is better than all of that combined to this particular company. So this is how it kind of all comes together. And not everyone will get all of these benefits because not everyone will meet all the qualification requirements. But my made up ABC dental office does. So originally they only received 80,000 bucks in PPP. And they would have not gotten a cent else in COVID-related relief until this bill passed. Now they could get a $50,000 employee retention credit, an $80,000 PPP, and possibly a $140,000 employee retention credit in 2021. Now, I will say there are potentially timing issues here because remember, we cannot use the same wages for PPP and the employee retention credit. So if you receive your PPP on, let's say, January 20th, you will be eligible to use the credit, the retention credit, from wages paid January 1st to wages paid the day you get the PPP. Then you have to spend your PPP and then you're able to capture the retention credit again. Theoretically, rules on that are pending. There is a common belief out there that the IRS is going to let us pick and choose which wages we want to use for PPP forgiveness. If they do, this is a heist for business owners, and this could be a gigantic, gigantic jackpot. All right, this is slide 61, and this is the most important slide on this deck, and this is the slide that I will want you to reference back to. These are 4 questions that as a business owner, you should be asking yourself right now. If you meet any of these qualifications, you will be eligible for further coronavirus-related relief for your business. If you qualify for numbers 1, 3, and 4, you will hit what I call the Holy Trinity, and you will be able to do what ABC Dental did and capture at least a piece of all of this stuff that is coming to you. All right. If we send out an email with this at the end, I will make sure that we highlight these 4 questions specifically in case you have not had the opportunity to write them down. I'm also going to give you another way that we can go about this. All right, a couple more things because I'm at 12:17 that I just want to fly through here. The FFCRA was a bill that came before the CARES Act that allowed for small businesses to get a tax credit equivalent to 100% of their wages paid to anyone who was out sick because they had coronavirus, symptoms of coronavirus, were quarantining, or were taking care of children who either were sick or had their school or daycare closed. The FFCRA is still in play, but it is no longer mandatory. That's a big change of this program. So it is now optional, but my opinion, if you qualify, no reason not to take it. If the government's going to pay you for it, you may as well pay your employees when they are sick. That's just a couple things of how this that's going to work that you can go back and read later. If you are in the medical profession, including those in the dental field and in social work, the HHS had something called the Provider Relief Fund. There is now $3 billion that has been added to that program. We do not know how they are going to spend it, but there could ultimately be more money for you there as well. If you are a shuttered venue or affiliated with one, or if you are an agent of a performer, there is a new grant program that will come out that is a big, big deal and will provide shuttered venues such as the Dr. Phillips Center, the Winter Garden Theater, etc., with grants of up to $10 million to compensate them because obviously we are not doing a lot of movie going and play watching at this point. All right. We're at the end of the tough stuff. Now we're on to the easy stuff. Your next steps. This is just a brief overview of all of the money that I have been able to procure for my businesses and individuals over the course of 2020. And in the end, so far, we are at $3.38 million of COVID relief that we have gotten for 152 individuals and small businesses located all across the country, but the mass majority of which are here in Central Florida. And again, I'm not charging a soul a cent for this. And you may say, Adam, why are you doing this? Are you just a nice guy? Well, of course I'm just a nice guy. But in addition to that, I will give full disclosure that I have gotten $34,500 of PPP myself. I am eligible for another round of PPP as well. So with that $69,000 that I have gotten or will get from the SBA, I am using that number to allocate to my fees to anyone and everyone who needs my help. And even though I have probably done significantly more than $69,000 worth of billing for this, that's quite all right. I live in Windermere. I have a very nice house. Money is not the object at this point. So it is my goal to keep as many businesses open and as many people afloat as I can. So whether you are in need, whether you know someone else is in need, please, I encourage you to reach out to me. I have deliberately blocked off the rest of my day today, that I have nothing else going on aside from answering emails and phone calls about this. Okay, I did want to touch on this first as well. Go back to slide 61, okay, just a reminder, the 4 questions page, okay? answer all these questions. If you're not comfortable with answering these 4 questions, here's your cheat sheet. Fill this in. Just give me your quarterly revenue by quarter for 2019 and for 2020, and I will be able to take the rest from there and figure out what you ultimately qualify for. And after 42 minutes of talking about this, aside from the fact that I need a drink, I am done. Here is all of my contact information. I will leave this up. Please contact me. I encourage you. You have nothing to lose by calling me and saying, hey, Adam, do I qualify for things? So with that, we've got 10 minutes left. I didn't do so bad. Krista or Carrie, if there are any kind of general questions that are out there that I can answer, I am happy to do so at this time.
Well, I will tell you, first of all, thank you so much, Adam. That was a whirlwind of information. I glossed over a little bit in there, but I know that I can go back and look later and figure some of that out. And I know money is not what you're working on right now, but it has to be your karma. You're building up that good karma for the next time, right?
I appreciate that. I suspect my business is going to grow, for full disclosure. I suspect my business is going to grow by about 40% this year from all these efforts. I've already captured probably $120,000 worth of new clients just based on all of this. So look, is there some 4-dimensional chess being played here? Sure. But ultimately, this is really about making sure that all the money gets where it needs to get to keep everybody afloat.
Well, thank you, Adam. Now, I'm going to go back all the way to the very beginning of our chat. And I will say that Fernando was a little concerned about what your dog was going to do with that pile of papers.
He's going to leave it because he's a good boy.
And then let me get back in here. So Alex Sanchez says, hi, do 1099s qualify for the payroll?
No, they do not. And I do not suspect that SBA is going to change guidance on that. And the reason for it is because if you received a 1099, you are eligible for PPP yourself. This was basically the guardrail to make sure that both the business owner and the employee, your subcontractor, would not both be eligible to get PPP based on the same wages.
Perfect. Thank you very much. And then the next one is from Melanie Randall. And she says, how do we capture the ERC for wages paid in the third quarter of 2020 if the 941 has been filed?
Good question. We don't know yet. The reason why I have not started applying for all these retention credits for all my clients yet is because the IRS is going to do something with it. What they're going to do, I don't know. They may make us file amended 941s. They may give us an opportunity to capture it on your fourth quarter 941. Odds have it, it's going to be an extra form, though, that ultimately needs to be filed. That just does not exist yet at this point.
Okay, awesome. Thank you. And then the next says from Paula, for the new PPP, what about necessity? Stayed the same as last year's PPP, correct?
Not 100% sure what the question is here, but economic uncertainty is no longer the requirement for round 2 of PPP. You need to have had that reduction of revenue in order to qualify.
All right.
Chef, I'm assuming that's Paula Santagati.
I don't know.
Okay.
Carrie's shaking her up and down.
Yeah, Chef, I got you. Don't worry.
All right. Okay, Carrie, you want the next one?
Sure. All right. The next question is from Joanne Quarles. Does the new business open in 2020 also qualify for assistance?
Probably not. Business would have had to been open by February. I forget whether the date is 1st or 15th. I think it's the 15th. In order to qualify for any of this. That's not to say, though, that there may not be a backdoor into the employee retention credit based off of government shutdown. We don't know yet. I have had this situation with a client who opened up a business after February, and this particular business was in the food and beverage industry. I have taken the retention credit for him based off of being shut down, but I did so with the caveat that we may have to pay it back one day because there is not a very specific rule as it pertains to that. And I don't know whether we're ever going to get one, quite honestly, for that situation.
All right. Thank you, Adam. And then I also have one from Margaret Latham. Can businesses that opened at the beginning of 2020 potentially qualify for financial assistance, or is that going to be that same February date that you were just talking about?
It's going to be the same February
Okay,
date.
perfect.
So if you were open 1/1, you're good. But if you open March 1 or sometime over the summer, you are probably not going to qualify for anything.
Thank you. And then I have one other one here, and that's going to be from Vidya. Should HHS grants be included in revenue for the purposes of qualifying for PPP2?
Good question. There's still, excuse me, there's still a good question whether those HHS grants are even going to be considered taxable income. So we don't know. Along those same lines, if you got a PPP as an example in the second quarter, does that count as gross receipts for your second quarter? Boy, I sure hope not, but we don't have guidance on that yet. Maybe tomorrow I will have the answer to that question.
Perfect. And then Krista, do you see any other ones there?
I just see Clinton, to clarify, the SBA will define gross receipts today. Is that correct?
We hope.
Adam?
We hope.
We hope.
Odds have it, if this goes like anything like the last round of PPP did, we're going to get guidance today. And then what's going to happen is we are going to get a series of what were called interim final rules. Now, I don't even know what the definition of an interim final rule is, but the SBA put out 21 of these to go with 54 frequently asked questions, including one that came out as recently as November. So the guidance we get today, you know, I can't tell you for certain that it's not going to be final guidance, but it's almost certainly not going to be final guidance. So I hope we have answers, but that doesn't mean those answers won't change.
Okay, and then, okay, so if so, then revenue is not the question then? It just depends.
It depends are going to be the two most popular words in they were already the two most popular words in accounting in general when it comes to taxes. And obviously I'm going to have a lot of those questions to answer this year too. But yeah, it's going to depend. We're going to have to see what my gut is. If you ask me what my opinion on the matter is it's going to be earned gross receipts, not if you got HHS grants or if you got Orange Cares or whatever county you're in, their grant program or PPP, but we just don't know yet.
Okay, and then I know we talked a little bit about those 1099s, but we also talked, I know in the first round of PPP, they did the gig economists, the gig economy. So those people that are doing their own thing, the Uber drivers and such. So is that the same as the 1099 question we had earlier?
Right. No, this is a little bit different. So if you are an Uber driver or you're an independent contractor for a construction company or whatever it is you do, if you don't file a separate business tax return, you file what's called a Schedule C on your personal tax return. And the way that your PPP was calculated originally was you would get 2.5 times what shows up on line 31 on your Schedule C. You had to be profitable in 2019, though, to get a PPP. Now, the question will be asked here, are you going to be able to use that same number in 2020? Are you going to have to do a 2020 Schedule C? Are you going to have to be profitable in 2020? We don't know yet. Yes, there will be some mechanism there for those people, but that doesn't mean it's going to be something that anybody necessarily likes.
Okay, perfect. All right, Carrie, do you see any other questions? I don't, but I don't know if maybe you could.
I do not, but I am just double checking here. And no, I think we are good.
Awesome, wonderful.
Awesome.
Well, Adam, thank you so much for your presentation today. Like I said, it was very thorough. I glossed over a little bit, but I took some notes.
That's okay.
And I will definitely be going back to that PowerPoint. And we will send the PowerPoint out to everybody later this afternoon. We will also put it on the Chamber website, and we'll share all the information there. But I want to thank Computer Business Consultants and Clinton Pownell for being our sponsor today. I want to thank all of you guys for participating. We do have an in-person event coming up at the end of the month. That is our Lead and Feed, and I believe that is on January 21st at Feather and Quill. You can start registering for that. I think that goes out tomorrow. Carrie, is there anything else I need to say?
No, I think you hit all the highlights, and great presentation, Adam.
Awesome.
Thank you so much. And I mean it. Reach out to me. I literally have nothing else on my calendar today. So if you have those specific questions, call me, email me. I promise you I will get back to you today.
You got to take the dog for a walk, though.
The dog is fine. My wife will take the dog out when she gets home.
All right. Thank you, Adam. Thank you, everybody, for participating. I hope you have a great rest of the afternoon. And Adam, I know you're going to be busy, so thank you very much.
Thank you. Appreciate it.
All right. Thank you, guys, and have a great day.